Welcome to another edition of Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Of course, Cattle Call is brought to you by Wolf Auto, small town strong. We have been talking for weeks about this elevator. We knew the escalator took a while, and Brad's been preaching it that this elevator is going to start to drop. Maybe it's going to stop on a floor or two as it goes down before it goes back up once again. But we're going to talk more about that. What seems to be the movement in this market this week as we see some drops, as we all know, that took place. Of course, I just mentioned it. It's Brad Kooima. He is with Kooima and Varilek out of Sioux Center, Iowa. I wanted to start out there. I mean, market broke $11, and you've been saying all along, be prepared. We're going to see a drop for a little bit.
Well, yeah, thank you for that kudos shout out there. Yeah, nobody likes to be right when the market goes down, right? I mean,
Right.
I don't either. But thanks for having me on, of course. Yeah, I think the old saying is up on the stairs and down on the elevator. Huh? It feels like these breaks always happen so much quicker than the rallies. But I would say this about it, it didn't take us but a week and a half here. We went from being overbought to now where we're oversold. So maybe there's a technical reason there. Let me kind of unpack the technical side of the market here a little bit, I think, first. And then we'll see if the fundamentals don't, at the end of the day, still make a bit of a difference. That's the way this whole uptrend market has been, where the seems like the long speculator is reluctant to believe in it until finally, oh, by golly, the cash is okay after all. The cash is higher after all. And that seemed to, work on the way up. And we'll see once here if we don't get some of that action here in another week or two. But so oversold now. I do like where the market is held for now anyway. On this break, if you look at individual like Feb and April charts, very close to a 38% retracement, which is a good spot to hold. That's a lot of technicians watch those type of retracement levels, and so far they've held there. On a weekly chart, it looks like we're very much alive and well in terms of the uptrend lines and stuff like that off of the weekly chart. So that's also a positive thing. So when you're at a level as high as this one is, Susan, the $11 feels like a lot. In the old days, that would have been a lot. That'd have been the whole break for the whole year, right? We've gone from 75 to 66 or something like that, and called it winter high, summer low. 10% of 200 is $20. That used to be the rule of thumb, right? 10 or 12 cent breaks. So that's the technical side of the market. I think certainly the cash hasn't helped us here the last 3 weeks though either, Susan.
Yeah, when you look at this and obviously see the movement, you do the sale barn comparisons and what you see from a packer perspective, what is your thoughts? And is this something that's just going to stick around for a little bit, get ourselves stabilized before we can move back into some more positive territory?
I'm hopeful that that's exactly what we're going to end up doing, Susan. But we've got to first figure out where the bottom of this pile is here, I'm afraid,
Yeah.
So we've lost $2 to $3 on cash every week now. It looks like it's going to be for the third week in a row. Some of these early bids in the South, there was light trade yesterday at 203. Apparently market news is carrying just a little tiny bit of light trade at 203 in Iowa. I'm not ready to give up that we're all going to be quite that bad this week at 203. I don't think so. I think there's a shot at 205 or 6, but that's still, last week it was 208, the week before that 212. So they've taken it off in bunches. Of course, kill cuts, we talked about that for a couple of weeks. A couple of majors going 32 hours, some regionals only going 3 days. Got a little bit of weather though in the market. That doesn't seem like it matters. I don't know, unless you're not getting any weather, but we're actually having some of our first weather here. Pardon me. So the packer, he has been the one on the other side of the leverage question for a while. So he's human too. He's going to want to try to get that leverage back, right? And probably feels like for a moment he does. You might have a feeder. I talked to one this morning, for instance. He says, well, I haven't sold any cattle over 200. I'm going to take 203. Understood. So you can see some of that, right? If you hadn't had any cattle on the way up here, you're going to probably be a pretty easy seller. And if you're a hedger because of the basis, that's probably going to incentivize you a little bit more.
So while you're doing that, I mean, you talk weather, and we are finally getting some snow here. Bitterly cold temperatures, as you and I did this on a Wednesday, are set to move in tonight into Thursday. So I think more the cold than the snow, because the snow doesn't have much moisture in it.
No, it's been an uncommon. It's been I don't know. I don't keep records on this, but it has to be in my memory the most mild open winter to feed cattle in Iowa ever, at least in my short memory. But so we'll see, whether you would think that might stimulate a little bit of interest in February cattle, but interestingly enough, February is the weakest of the months here today. We are trading just a little bit higher. I make it sound like this is the end of the world, but futures are a little higher today. It's just that the forward spreads aren't working very well. But this time of year, we still got to keep an eye on weather. The weights, still kind of the grill in the room, although we've had 2 weeks in a row, folks, where the weights have come down quite a bit. So, there are some things to make me. I had a friend of mine that used to describe, this shifting of the leverage momentum, right? Okay.
Mhm.
So he used to use a phrase, something like, well, when the dog runs to the end of the chain, you know what I mean? When you get to that end of the, okay, we'll do this, we'll do this until, wait a minute, that's enough. Okay. So I wonder if the weights keep coming down, maybe by the end of next week, I'm gonna stick my neck out here. I'm dumb enough to always do that for you. It looks to me like this week's cash is going to be sluggish, no runaway. But let's see what's maybe if we get by the time we get to next week. I still believe that the North is pulled forward a month. I still believe that we are super current. That if they try to get these bids down to say like 200 or less, I think then maybe the feedlot and the producer bows his neck a little bit and says, you know what, I don't think so, and then we'll see if we can't trough that market back out and just like you described, start to come back higher.
So are you surprised or shocked that the South Oklahoma had taken bids as early as midday Monday, which is kind of unheard of? Or was it prep because of this cold and snow that was moving in that they were like, let's get them pushed out?
Their strategy escapes me. Okay. Sure, these guys are really good people, right? Their strength is not negotiating for cash cattle, however. Basically, to one packer, where that seemed to be where all the business was done at 203. Why you do that early in the week? Let's quick hurry up and take $3 less than we got last Friday. I'm not sure if I really understand it, but I guess it's probably a function of where the base. They'll tell you this anyway. That it's because of the basis, and I'm a hedger, and I needed the room, or I was afraid of the weather, or a litany of reasons. But I don't know. It is what it is. They don't trade hardly enough cash cattle down there to make a difference anyway. It's unfortunate that it has to get reported when they traded so poorly.
So finally, as you look at the markets and moving forward, what about demand? I mean, this is February. Consumer demand, they've already gotten their Christmas bills in. I'm thinking they need to grill some steaks for Valentine's Day. But where are we seeing? Are we going to start to see those, those February freezer or meat counter type displays going on to push some more meat?
Yeah, great question. And I know some of the listeners don't care for talk about CattleCon or NCBA news, but it was interesting to me that you and I talked about this, right? You remember when we talked about that segment of what was the actual fed cat slaughter for the year to date, and it's down 0.5%. So we're only down 0.5%. So supply was hardly down. Why was the market so good? Well, because demand is just nothing short of phenomenal. That's why, in my opinion. So right now we're going through a little lull in that thing. The week before Super Bowl, the middle meats slow up. That's what they do. They switch features to different things. People are on maybe, like you said, catching up from Christmas bills, whatever. It's not ideal weather to grill outside. And so you're going to see, and you're seeing some of the softness in the middle meats. Middle meats, I mean the steak cuts, rib cuts, the ribeyes, the strip steaks, the loins. You continue to see incredible strength in the grind, especially the 90s. So I think you switch that feature a little bit toward that grinding meat, that hamburger meat, and that might be somewhat more of a budget conscious type consumer too. That's doing something like that as well. Now, one thing about that question there, I think there's a side story a little bit, and that is with the kill cuts. Okay, so when you slow down the kill a long ways, right? There's now all of a sudden there's less meat that goes into the pipeline. And what usually happens in the next knee-jerk reaction is you see an uptick in the boxes, which I think if I'll be really sad if we don't in the next 10 days start to see that developing real quickly. And then the packer's going to be going like, oh, shucks, now what should I do? Maybe I better get back and going again, right? So
Right.
that would kind of be chop wood. That's an old phrase that commodity brokers use, where maybe we just got to be a little careful here yet for a little bit. And a little bit is days, not 5 minutes. I still think the supply side of the market's in very favorable for both of us.
Oh, wonderful. Well, again, we want you to do some steak grilling or some sort of beef coming up here on Valentine's Day. Brad, what's the best way for folks to get a hold of you?
Check us out on our website, kkvtrading.com, or the phone number 712-722-0023.
All right, that's been another edition of Cattle Call. Cattle Call, of course, is brought to you by Wolf Auto, small town strong. And a quick reminder that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been another edition of the Cattle Call on the Rural Radio Network.